Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. I hope you're having a phenomenal day. Welcome aboard to those new subscribers who just came along. Thanks for always hitting the like button, maybe even commenting below. Let me know, what do you think we're going to see here next? Are we going to continue to establish higher highs for Bitcoin and break our most recent all-time high from last night? Let's see what's going on here. Now, taking a look really quick, we're going to understand specific order block data, as well as some CME gaps here, our 7-day, 3-day, and Bitcoin dominance and altcoin dominance comparison. And then, of course, just kind of round it out with some liquidation data here that's super important. We got some obvious things here that are going to happen here soon when we see these kind of liquidation events occurring. Okay, so be sure to stick around. We got an important one today. Let's take a look. All right, folks, before we jump into the backend data, just got some quick updates here for you just regarding the post that I sent out on social media. Just a quick heads up, government shutdown since 1981. We've seen 10 of them, and most of them lasted a very short period of time up until the recent past. So the last 4 of them have averaged roughly about 15 days. So we could see the government reopen here in the relative near future. Only reason why that's relevant here is because this most recent one, 2018, we saw a 50% correction from Bitcoin roughly 2 or 3 weeks after that happened. So just be mindful that there is still potential for a reckoning to happen, and for us to be pumping into this makes very little sense to me. Once more, that's just strictly a fundamental catalyst. Obviously, these things never truly make a lot of sense. Just jumping into our Bitcoin liquidation heat map, delta, and open interest, we do have some key levels here at 117 and roughly 119 here as a local support ranges. Those are previous highs, and also volume support. Majority liquidation here has been swept. We saw the 120 to 124K range, and now 124 to 126. There's late shorts at 126 to 128, but liquidation delta is good, and open interest is looking very supportive in the 118K range. So now that we've understood that kind of foundation there, and we look at the open interest here, or sorry, more important, open order blocks here. These are open positions that are looking to get filled. We can see a pretty heavy sell order at 123.5. So it leads me to believe if we go any higher, we're probably going to see the price reject out of that area. Once more, that's just kind of a local resistance. Now, to touch on resistances or supports, or more so just gravitational magnetic, if you will, for lack of better terms, concepts here. This is basically just Bitcoin, Ethereum, and Solana CME future gaps. So these are getting formed right now. We can see right now that CME futures closed on Friday at 123.5. What do you know? We have a pretty significant order block there, and that's what you would refer to as a resistance, right? So hypothetically, the price comes up to 123.5 when the market opens, which is here in just a few hours. And then, of course, we see the price turn around from there. So just keep in mind, Bitcoin has a CME gap upwards of 123.5. Ethereum has a CME gap at 45.70. And then Solana has a CME gap at 235. So all 3 of these coins could very well pump before the price pulls back again. All right. So just some kind of friendly advice there. When you trade CME gaps, just be mindful the price is generally going to turn around when it hits or fills that lower or upper range, depending on the direction it's heading. All that said, looking here at the 7-day time frame, this is basically the weekly time frame. This is an important thing to kind of walk away from here. In other words, we have closed, or sorry, we're due to close above our previous all-time high weekly candlestick closure. In other words, we've never closed above 119,500, and we're well above that now. So that reinforces potential support at 119.5, which is a rough estimate of 120,000. That's the easy round number to remember. So that's an area of confluence. Another area of confluence is, once again, the 109K range, and then obviously 101,000. The only thing I want to point out here for you, too, is just that we do have a double top forming, okay? You could even argue it's a triple top because there's one previous candle wick up there, but generally speaking, when you look at patterns like this, right, we saw a previous double top pattern where we kind of continued higher for a few months, price action hits its current high, pulls back, comes back up again, hits that same level, but goes just a little bit higher and then pulls back inevitably, right? So if we look at that same exact pattern, it matches up pretty well with what we got going on here, doesn't it? So that leads me to believe that we are due to potentially continue a little bit lower here in the relative near future now that that upper range has been swept. Okay, so once more, this is just kind of market maker 101. They're trapping you into late longs so you can FOMO into this new all-time high territory and get absolutely destroyed. So hypothetically, I think we're more likely to go down than up based on this sentiment alone. Okay, now there's going to be a lot of other things we're going to see here on smaller timeframes that tell us we're going higher, right? So I don't want you to attach yourself to a mindset of either direction. The concept here is that we've got to kind of be patient and see if the price pulls back, but also consider averaging into long positions because there's a good chance this is the stopping point before we continue much higher, right? So here's the 3-day time frame. This tells us a little bit different of a story. We've maintained above our channel here, our channel range, both moving averages, the 20 and the 50, and we have a significant MACD convergence, and we can also see the break above that 20-day SMA for the 3 days. So the 3-day time frame also looks pretty awesome, okay? So this leads us to believe that we're more likely to go higher than lower, right? And most signs on most time frames are going to indicate further upside. Even the weekly looks bullish too, don't get me wrong. I just want you to understand that those kind of patterns, they have a tendency of manifesting themselves, not because they're patterns, but because manipulation occurs. And since we just barely swept that upper range of liquidation above our previous all-time high, it leads me to believe we're going to pull back now, and the likelihood of further continuation lower is higher, at least to that 119, 117, maybe worst case, 110K range. Okay, so that's kind of where we're at there. At this point, I think market makers are going to try to trap people into late longs, and they're going to pull the price action down. And then once everybody's scared to death, then they're going to pump it up. All right, that's the potential hypothetical here for us. All right, so take a look here. This is the Bitcoin dominance chart. Bitcoin dominance is on the top left. Bottom left is Ethereum. We can see it's kind of running flat. Stablecoin dominance is on the top right, which is common when money is flowing into Bitcoin. You see money flowing away from stablecoins. And then we also see, of course, altcoin dominance increasing. Now, if we do take a look over at our Discord here, I have this pinned in our education section. The concept here is when Bitcoin dominance goes up, the price of Bitcoin goes up too. When those two things happen together, rather, Bitcoin dominance goes up and the Bitcoin price goes up, which we're mostly seeing, altcoins have a tendency of going down. All right. So what we're really truly looking for is for Bitcoin dominance to go down, which it hasn't yet, and for altcoin season to essentially occur when the price of Bitcoin goes higher. So the problem we're running into right now is that Bitcoin dominance isn't budging, which essentially puts us in this category here of stable coins, stability rather in Bitcoin dominance, providing us with a 1-to-1 ratio for most alts. So as you saw here, there's a great chance that if Bitcoin pulls back, altcoins will pull back with it because they're paired as a 1-to-1 ratio. So once more on this channel here, I really like to identify, comparative analysis between coins and obviously identify outliers. That's how we're able to stay fairly successful. And a lot of that derives from liquidation. So let's look at liquidations here and see if there's any altcoins that may be suffering that imbalance or outperforming versus Bitcoin. In the last 30 days here, we can see there's very little liquidation left to the upside. Okay, 126,000 is that small little chunk above. But we have a pretty significant chunk of 120.5. We identified that yesterday. And then 118,000, 117, and 115.5. So there's that big area of volume here between 115.5 and 117.5. Rough estimate 118, and that's an area I'm most interested in considering along if we were to pull back to that level. Now this is the last 24 hours. We can see the very, very mischievous wicks up here to sweep all the late shorts, and then now pulling back to sweep the late longs. This is market maker 101. It's like as if it never happened, right? We're right back to where we started on the beginning of the weekend, but almost everybody is completely destroyed. It's just very standard stuff. And we look here as well as the liquidation heat map. We can recognize that's a 3-to-1, almost 4-to-1 ratio of Bitcoin shorts versus longs. So we got a 4-to-1 ratio for Bitcoin. Ethereum's like a 2-to-1 ratio for shorts. That implies sustainability and more likelihood of holding its current price point. So Ethereum is still looking quite strong. We're seeing a very similar scenario here for Solana as well. And then the handful of others too. You can see majority of low market cap coins are seeing that inverse pairing here where more longs are getting liquidated than shorts. So they're getting hit a lot harder. So if you're trading, non-top 100 coins, you're more likely to get stopped out because they're much more volatile. Obviously, that's redundant because we know that low market cap coins are such, but they're even more so of a correction right now than out of the top 100 or top 10, if you will. So that's generally why I like to stay in the top 100 in most cases when I trade altcoins. All that being said, we can see here that there's just a tremendous amount of ETF net inflow, okay? So that increases sustainability, more likelihood of further continuation higher in the overall sense. Now, oftentimes when I study these ETF net inflows, for the most part, you're going to see these ebbs and flows pretty consistent. In other words, we moved 5 days in a row without retracement, right? What do you think is going to happen now this next week? Do you think we're just going to keep going up? It seems very illogical to presume we're going to go higher right now based on massive overextensions and not only volume, but also liquidation. Okay. Quick heads up to my traders, make sure you take full advantage of this offer here from Bitunix. There's a significant deposit reward bonus as well as a $16,000 individual reward for just trading on the exchange. If you use my link to register in the past, you're automatically eligible. If you use my link to register now, you're eligible for all future trading bonuses and competitions. Check out the links down below for more information. So let's jump in the back end here, see if there's anything we can identify. We can zoom in here and just kind of recognize there's way more liquidation piling up to the downside. We are now in a greed type of scenario here where greed is starting to overpower. People are starting to FOMO in, shut up and take my money. That's what everyone's doing right now. And in that case, when that happens, you generally want to sell the greed, right? So the concept here remains the same. Consider selling the greed and buying the fear. We bought the fear back here at 110K. Happy we did. We took some nice profits on the way up. Now that we're somewhat maxed out with a double top on the weekly, it seems practical for the price to pull back, at least to sweep the majority of these liquidation levels to the downside. So just some food for thought there. We can see, of course, top trader margin is low over the weekend, which is good. Basically just implying that we're seeing a lot more institutional and whale traders trading. So we got a pretty significant amount of uptick here for $100,000 to $1 million positions. And if we look at the 10 to 100,000 range, we can also see that increasing too as the price goes higher. So that does increase the odds of the price going lower now, because if you see retail traders are kind of like, what the heck just happened? They're not active at all. And the main reason why is because they're getting liquidated, right? So that's just kind of the concept there. So overall, when we look at the open interest ranges on the far right hand side, the most relevant open interest range for us is 118,000. That's an easy round number. It's like 117.7. But the concept is that that's the previous high, right? Previous high hasn't been retested as a new low yet. It should have been, but it hasn't. So that's exactly why we're probably going to see that. Keep in mind, open interest ranges work as magnets in a lot of ways, where the price gravitates towards it. So all that said, if we look at that and we combine that kind of here with liquidation delta, it is tapering off, but it's still massively overextended at 20 billion plus. It's way too much. If we look on the left-hand side, this is the macro perspective. This is the last 30 days of liquidation. We can see 126 to 128 is effectively that upper range, which seems like a potential reality at this point, considering how fast the price wicks up yesterday. But that was just a standard short squeeze, okay? It's Saturday night at 7 p.m. We get a significant notification here. If you're part of our community, you'll get these whale alerts here, basically letting us know that we had $780 million purchased in 6 minutes on Saturday night at 7:32 p.m. Pacific Standard Time. That is stupid. That is dumb. That shouldn't be happening on a Saturday night. The reason why it's stupid and dumb is because it manipulates the market, which is super consistent. So all that said, we look at that and we compare that with our open interest delta, 93%. That's super high. But our true retail longs here is increasing in percentage. That's at 38%. Or sorry, 31% is a delta. Generally speaking, the higher that goes, the more likely we are to see capitulation, just based on the simple fact that true retail long accounts are increasing, and the larger amount of retail getting into long positions, the more likely they are to get liquidated. Okay, so it's just that kind of standard that rinse and repeat. So taking a look here at the daily time frame, let's quickly understand this and call it a day on Bitcoin here. Let's look here. First of all, daily time frame. We have some confluence because I've changed, or just more so just kind of given us some local fib levels here based on me feeling 125.7 is the highest point we're going to go for now. All that said, we got some confluence here. What do you know? We actually have confluence on a fib level. 117,200 is that area, that halfway mark for Fibonacci retracement, but it's also the local high that hasn't been retested as a new low. So with us being 7 days of continuation into this pattern, we probably got about 48 hours more worth of continuation higher or sideways before the next leg down. And the reason why I say that is because if you look at Bitcoin's history, it hits 9 on TD sequential very often, almost always at its highest or lowest point. So we're at a 7. We've probably got about 40 hours more of continuation before the next leg down. So we may see a slightly pumpy Monday, followed by an extra dumpy Tuesday or Wednesday. That's the rough estimate there. But overall, the scenario here remains the same. We've got previous high of 120. That's going to be considered as a support level for us. Once more, that's that weekly candlestick closure. We've never closed above that level until likely today. All that said, 120 and 117. Really easy round numbers to remember. I'm just kind of rounding down for you. Those are two solid areas of consideration for DCA targets. So I'm still heavily interested in a long position in this range. Okay, that's kind of the concept. It's difficult to want to FOMO into an all-time high top, even though all-time highs have a tendency of being very euphoric and very irrational. Okay, and I say that because it's not like it's an emotional thing, but that's how people who trade this are in these situations. And the more emotional they are, the more logical those whale traders are going to be, and they're going to smash the price and they're going to destroy you. Okay, so please understand, whale traders are the enemy, but they're also your friend if you understand how they think. And right now, they're thinking they got some juicy targets here coming up with those liquidation events to the downside here to sweep those late longs. Those are my thoughts. What are yours? Why don't you comment below? Now let's go ahead and take a look at some altcoins. All right, folks, before we jump into the charts here for Ethereum, we're just going to take a quick look here at the backend data and just kind of reinforce some areas of interest here, specifically open interest. When we look here at the chart, we can see 4560 is that significant area of open interest. That's going to be construed as a resistance here locally for Ethereum. I've been talking about for a few days that ETH at 4550 may be a solid consideration for a short, just based on the simple fact that that is a heavily contested area. We got a secondary support here at 4300 based on open interest. Just remember, we see 4300, that'd be a solid place for consider a long. So in my mind, I would like to see 117 to 119K for Bitcoin and 4300 to 4400 for Ethereum. Kind of consider some longs there, right? Between now and then, shorting is inherently riskier, so please understand that. But we take a look here at liquidation delta. We can see there's still significant uptrend here, more liquidation flowing in here, or basically more longs than shorts because there's a significant amount at 20 billion. So when you see that number stay high for too long, it's generally going to be reversed, right? Now, when we take a look at reversals here, this is kind of something I talked about yesterday, that this coin is actually still super bullish. In other words, we have liquidation all the way up to about 5,000. So if you think about it, there's more longs than shorts in the market, but there's more liquidation above the price. What does that mean for us? Well, it tells us that there's a more distinct likely probability of the price going higher than lower for this coin, even though it's overextended, yes, and we have a lot of liquidation to the downside. The liquidation to the downside is further away, right? Those are people that are actually heavy in the $3,800 to $4,200 range. All that being said, we can see way more liquidation close by. Generally speaking, that's going to get hit first. So I wouldn't be surprised we see another couple days of continuation higher. Once more, we're at a 7 on TD sequential here as well, kind of letting us know that a massive little short squeeze is a distinct probability. Now, we're also consolidating above our local low here at about 44.40. Okay, so if you caught my analysis from roughly a week or two ago, regardless of that fact, we had support at 4,400 that kind of held for multiple days before we lost it, and Bitcoin dumped, right? Now we're back up above that level. We've been consolidating nicely for 48 hours, albeit a weekend. Volume is a little bit lower, but still a pretty solid situation here. So if we do see a retracement to that 44.50 mark, that makes more sense for a long. So the easy way to understand it here is that Ethereum is still very, very bullish. I wouldn't recommend shorting this coin unless you have tight margins, which we've done recently. We shorted SUI and Solana with good success on Friday to Saturday. But between now and then, like the whole concept remains the same. We need to, if we're going to consider short positions, you have really tight shorts and you can have looser longs. In other words, you can take longs for higher price points, but if you're going to take a short, you got to pay close attention. So it's inherently more risky to short right now. We are definitely in a bullish type of trend. So that's kind of where we're at there for Ethereum. Why don't you let me know what your thoughts are, and we'll take a look at the next one. Just before we take a look at the next altcoin, I want to recommend you consider trading with Bitunix. If you use my link to register down below or have in the past, you'll always be eligible for future trading competitions, but this one is awesome. It's probably the best one I've seen yet, with a full-on $16,000 individual prize pool, as well as a collective prize pool as well for the top 30 traders. Be sure to check out the link down below for more information. All right, let's take a look here at Solana, see what's going on here, double check a few important things. So Solana is a beast right now. It's broken this descending trend. If we look at our open interest range, we can see 235 is still that consistent resistance. That's right where the CME gap closed on Friday, or CME futures closed on Friday, at that 235 mark. So wouldn't be surprised if we see that retested again. But for the most part here, that's a solid resistance. And then our secondary support is like that 215 to 220 range. It's been a support range for us in the past. And if we look at liquidation delta, we're pretty much running fairly sideways here, but we're at about 2.5 billion. That in combination with some macro areas of liquidation both above and below the price leads me to believe it's difficult trading conditions. It's easy to understand it. But let's double check here. Let's go a little bit deeper. This last 7 days, we can see obviously 240 is that next leg up, but there's also a significant chunk at 223 to 220. So easy way to understand this is that 220 would be a solid area for a long, and 240 would be a solid area for consideration for a short. Between now and then, we're right in the smack dab in that middle of the range. There's not a lot of meat left on the bone here in either direction, so it's generally best or safest to presume the price will continue a bit lower based on what we've seen so far, but more importantly, it's inherently more risky to take a short right now, and I wouldn't recommend that either. So daily time frame really quick here, just to summarize, because we haven't finished this yet. We don't take trades based on liquidation alone, right? We want to understand we do have decent momentum here. It's starting to slow down a little bit on both the MACD and stochastic on the daily. Most coins are exuding the same behavior here. So what do we do in situations like this? Well, we need to understand what Bitcoin is doing first before we understand any of this. That's why we cover Bitcoin in every analysis. And the concept here is that if Bitcoin continues to pull back, I think Solana will too, because you can see it's fairly well underperforming recently. And let's go ahead and do this here. This is a little easier way to identify how coins are behaving. I like to put a side-by-side comparison in most cases here, just to give you some perspective. So we got 120,000 for that support for Bitcoin. We see a decent retracement here in the last, 12 hours. Now, on the right-hand side, we see Solana. It pumped with Bitcoin, but not quite as high, all right? So when we kind of understand that we have a slight disparity between the coins and we're seeing a stronger pullback for Solana than Bitcoin, it does imply we may see a bit further correction. Now, this seems contradictory because we looked at liquidation before and we have less liquidation on Solana than Bitcoin, right? That ratio was off. So that does tell us in a lot of ways that Solana is still in pretty good shape. So once more, we've identified that there's good reasons to take longs and good reasons to take shorts. What happens when you do that? You generally don't want to trade that because there's too much conflicting information. But if I were to lean towards one thing or another, I would say that Solana is more likely to pull back under the premise that I feel Bitcoin will continue lower. And now, all that being said, we can see we've lost our short-term 20-day SMA. We're trending closer to 50 in the RSI. MACD had a little MACDFU there, essentially a rejection. So the concept here, to me, seems pretty clear that we're going to be going lower on the short term, but the macro perspective for Solana is still quite strong. So if you're going to short, consider securing profits between 215 and 220 at the very least, and then maybe also consider taking a long in that range. So I'm leaning a little bit more towards a long on the 215 to 220. I'm not going to try to short to that level, even though we already have a small position left available in our trade. So I don't know if you caught this here or you saw my trades from over the weekend. We secured 30% profit on our trade. And just to clarify too, some people wonder, how do I trade these? Well, oftentimes I provide multiple entries and multiple targets, right? And the concept there is to give you choices so you can get in when you want, and then also to get out where you need to. I don't take all these entries and exit targets. However, I do generally like to average into my first and second position, and then I usually like to average out in position 1 and 2. So we took majority profit at 224, but there's still a little bit left riding to that 219 mark. Okay, so just kind of give you some perspective. That's how I like to trade. In general, I don't get too crazy. I like to secure majority of profits in the first target. And I'll generally like to trailing stop my secondary target and adjust my stop loss to break even. That way I can walk away in the green. Now, take a look here at SUI. Let's go ahead and double check this here. SUI is going to be, this is an interesting one, as per usual. Once more, 360 is that resistance range, but we saw we wicked all the way up to 370 last night. So that's unforeseen because we didn't expect Bitcoin to continue much higher. But the concept here is that 360 is kind of hanging out as that support and resistance. a little too early to kind of tell us where that's at. Now, we probably want to look at the weekly time frame to kind of identify something, specifically the weekly closure. But at this point, liquidation delta is still high. We have a decent amount of liquidation to the upside, closer to the upside than the downside. There's more reasons to not take a short with this coin and to consider more so a long position. Partly because we have a macro type of bullish flag pattern here. We've been talking about this for a couple of weeks now, but the general concept remains the same. We've closed above this center line here, this local point of control. So if you kind of zoom in, you'll see there's a lot of volume here at about 345. That generally implies sustainability and continuation higher. So in a perfect world, the price wicks down to 350 and you take it long there. In fact, some folks already did that yesterday morning. So good news to you on that. You're probably in pretty good shape. I wouldn't want to bet against this coin, but let's double check the weekly time frame and just kind of see here. We haven't closed above. We actually still have a bearish engulfing candle, a bullish engulfing candle that's almost bullish, but not quite. So basically implies this week is just as strong as last week. So we've kind of had this indecision, so to speak, and this inability to break through this range, right? Generally speaking, that will continue in the direction it is deriving from, which is why we have this flag pattern. Now, when we look at the 3-day time frame, though, we got to recognize here too that we're tentatively breaking bullish. We have a MACD convergence. That in combination with the daily time frame closing above all moving averages for about 4 days in a row, we're more likely to go higher than lower in this coin. Okay, so if I see 350 again, I'm going to be very interested in a long position, but it's going to require Bitcoin to have already hit its 120 to 117K range, right? If Bitcoin doesn't pull back, there's a strong chance SUI will take off from here. Okay, so this coin's actually looking sneakishly bullish right now. I like what I see here so far from the macro structure. Let's move on to XRP. Round this out here and double check a couple of things. First of all, there is a pretty obvious pattern here for XRP. It's pretty interesting how it's forming, but generally speaking, you kind of got this larger time frame, right? And if we look at the overall sense, this is basically a type of breakout pattern. Usually these break to the upside. Okay, now not because it's a triangle pattern, it's retesting this bottom line here, but because it's more of a type of a pennant pattern that generally will continue higher. Now, don't trade anything based on that one thing, right? The concept here is that we have broken above our descending trend. That's really the most important thing. So if you consider a position on this coin, you got to recognize we have a lot of moving averages below the price. We're still stuck under this resistance range. And if we look at the backend data here too, we can see once more, too much confluence at that 303 range. So it's like we're basically hanging out right there at that support and resistance level. So it's really difficult to identify which direction it's going to head. So the truth is, when you see situations like this and you have liquidation delta, it's kind of averaging itself out at 600 million. And then we got this overall sentiment here of about 315 for the upper area of liquidation that does incentivize further upside. And then you kind of combine that with this descending trend break. There's still slightly more potential for continuation higher because of that. But it's just ever so slight, right? You're basically convincing yourself that it's good to take a trade in the upward direction. So when I kind of think about confluence and factors that are relevant to taking a trade, I like to get like an 80% probability or higher. In other words, more bullish than bearish signs for a long, inverse for a short. What I'm getting at here is that we got like a 55, 60% probability of further upside for XRP, and that's not enough for me to want to take a long position, right? So once more, we got just too much resistance above the price of that 3 to 305 range that I'm leaning more towards a price pulling back, specifically because this coin has a tendency of performing pretty consistent with Bitcoin. It moves on a 1-to-1 ratio on most cases, and the likelihood of us seeing a pump to the upside outside of those other idiots that like to cover this coin is pretty low, right? Once more, somebody's going to tell you what you want to hear. They're going to get you to clickbait the video and make sure that you watch some ridiculous XRP analysis. And that's based solely on their incentive to monetize, probably. I don't really care about any of that stuff because I'm here for you to make sure you are a better trader. So the whole concept here remains very simple. Don't trade when there's too much indecision, okay? Don't try to convince yourself to trade because that just doesn't do anything at all, right? So for the most part, again, no shade on this coin. I just think that it's ridiculous that there's so many influencers out there that cover this coin that don't know a darn thing about trading, and it's unfortunate to me. But that's how it is, unfortunately, right? They're going to get the views. I probably won't, and that's just the way that it goes. So it's up to you to make your own decisions. But in my 20 plus years of experience, trading coins like this based on fundamental catalysts is a very, very lose-lose situation. Obviously, it depends on the type of trader you are, but At this point here, there's too much conflicting factors to really take a long or a short. Okay, so it's easy way to understand it, but we're still slightly bullish in the coin because it's broken its descending trend. It's consolidating nicely above its support ranges, but it still has a heck of a large resistance wall between 3 and 305, right? So I'm going to be looking for a closure. I would say even a weekly closure or two above $3 to have any kind of faith that this coin is going to go higher. Those are my thoughts. What are yours? Why don't you comment below? Sorry for the sidebar there. I always like to provide my 2 cents, and I hope you find benefit. Thank you again so much for being an awesome part of my life. We'll look forward to seeing the next one. Take care of yourself out there. Bye-bye.